Hello and welcome to this special Money Week video cast. This is replacing for 1 week and 1 week only our usual podcast. And we are doing it as a video because I have with me today one of my favorite guests, Pippa Malmgren, who I think some of you will have heard speak before, and some of you might have read in the magazine, and some of you may have heard me doing a podcast with us before. She always has such excellent insights to offer us that we have asked her to do this special video with us. Now, Pippa is a former presidential advisor. She's an author. She's an entrepreneur. She's always got a whole horde of interesting projects on the go, which I'm sure we will hear about over time. Pippa, thank you so much for joining us today.
Oh, it's so good to be with you.
Now, the first thing I want to talk about is, one of the things I will say about you, and this is important, is that you are almost always right. This is something I learned from reading about you. Amazing ability to see into the future. And you say things very early on that other people simply don't think of. So a couple of years ago, when we were talking about Donald Trump, you said, what he's doing here is he's building himself an even better brand than he had before. So when he's finished being president, he can build the media platform to beat all media platforms, and that's how he's going to win, and how Trumpism is going to be, one of the great movements of the future, right? Now, I opened the newspaper this morning, and what do I see? Donald Trump about to launch a social media platform. So right again, yeah?
So, it's funny because when I started to talk about this, which was maybe 3 years ago, people, they literally thought I had lost the plot and was nuts. And yet it's so obvious to me that every single recent occupant of the White House has tried to create a media platform. The Clintons tried to do it. The Obamas have done it with Michelle Obama's book, and the deal they did with Netflix. And the thing is, we live in an era where communication is the key to power. So like anyone in their right mind in politics wants to own their own platform. So I don't know why this was such a shocking idea and so surprising, but it's important too, because, Trump absolutely understands the power of message. Whatever we may think of him, he's very adept at messaging. And when Twitter and the rest of the platforms cut him off, it actually accelerated this plan to own a media platform and then just go direct, right? It's the ultimate reformation, go direct to the voice.
So what do you think this platform is going to look like?
This I'm not so sure about. What I can tell you is there are 70 million Americans who support him. And when you look at the highest rated program on Fox News, it's like 3.6 million. That's like the most watched. The most watched on CNN is something like 2 million. So 70 million. Now, what's the conversion rate? How many of them will actually turn out to watch? Even if it's a fraction of 70 million, it's just this huge cash cow. So I think his backers, whoever they may be, they're going to look at this from a pure financial angle and say, this is just an unbelievable way to mint cash. And so there are lots of elements, different elements. One is it'll be profitable. I also think that what will it be? It's literally going to be, imagine Game of Thrones, but with more nudity, combined with political talk shows, but with more nudity. It's going to be so shocking. When you ask the question, who's going to watch this? The answer is everybody.
Yeah. And what will that do then to the political environment in America? Because that's the other interesting thing. I mean, a lot of people hoped that post-election Donald Trump would just go away, but obviously he was never just going away. And his continued existence with a platform, I mean, heaven's sake, even if he just started his own Substack newsletter at $5 a month and got 30 million people on, the influence is enormous. How does that shift the dynamic in the US and indeed everywhere else?
Yeah, so the important thing is just because Trump left didn't mean that Trumpism was gone. And I think in the aftermath of the election of Joe Biden to the American presidency, there's been this sense of elation, like the Wicked Witch is dead and we don't have to worry about this Donald Trump character. But I'm like, yes, we do, because forget about him personally. The point is the 70 million people. The point is there's still a huge contingent in America who fundamentally share his views on many, if not all things, but on many things. So there's a reconciliation that needs to take place in American politics, which so far there's no sign of, which allows I don't know, a mending of the fences, a knitting together of the disparate interests. And right now, everybody still takes a one side wins, the other side loses approach, which just isn't really sustainable. So I think his platform is it's going to be very divisive, just as he always is.
Okay, something to sort of look forward to, sort of not look forward to. So let's stick on this theme of accelerants and change. One of the things that we've seen over the last year, and we've discussed this before, is that a lot of the trends that were beginning or were underway a year ago have been hugely accelerated by the events of the last year. So when historians look back at the COVID period, I'm fascinated to hear what they're going to call it. They're going to call it, the great misery, the great acceleration, the great authoritarianism, et cetera, et cetera. But as we come out, those the things that have been accelerated, digitalization, et cetera, it feels to me like they're going to add into the pent-up demand of the lockdown period to give us a fairly stunning recovery.
Well, I've been in that camp for a while. And again, this is something that created such a reaction. People were like, no, there can't possibly be a recovery after all this damage. And I'm like, the only thing that can happen after this much damage is a recovery. And we're starting from such a low base of economic activity that anybody sneezes and the GDP numbers go up immediately. So I'm expecting to see quite significant jumps in GDP, and then we're going to get these headlines, GDP is up 20%. People are going to go, oh, okay, I guess it's all right. And I can go ahead and live my life. And also, there isn't one narrative that's going to dominate this recovery. And I think that's so important because everybody keeps wanting a single narrative. What will it be like? And the answer is going to be like a lot of things all at once. I keep referring to this as it's not a linear recovery, it's a quantum recovery, which is very similar to what happened in the 1920s when you had, and the aftermath of World War I plus the Spanish flu. There's one crowd that's so happy to be alive and loaded with assets, and they just spend money on champagne. And then there's another crowd who are permanently displaced from their livelihoods. And it will be hard to reorient them and reintegrate them into the world economy. Though I think the chances of getting a repeat of what happened in the 1930s are not just remote, but zero, because today we can't tolerate that much pain. We don't allow it to persist that long. The political cost is too high. So the creation of an underclass today is very different from how it was in the 30s. And I don't think it would be as bad or persisting in the same way.
And how will that be prevented?
Well, it's partly because nowadays we have much more data about things. So, in the UK, for example, Rishi Sunak's bailout of the retail consumer, that is what was done to prevent a terrible 1930s repeat. And there are a lot of people who have more cash in the bank than they've ever had before because government handed out so much of it. That's not everybody. I appreciate that, but there's a lot of cash around. And I mean, let's face it, this is a record sum of money that's been injected into the world economy. It dwarfs what happened in the financial crisis. So that money's going to go somewhere.
Well, the fascinating statistics at the moment are, or a lot of the ones I'm seeing, are about the number of people who are planning to invest their latest stimulus check, directly into the stock market. I mean, this has been one of the most interesting dynamics of the last year from the point of view of financial journalists. Anyway, watching the way the retail investor, who I've been nagging for decades, nagging the retail investor, the man on the street, to get into the markets, to participate in capitalism, to participate in the growth of the companies that are driving their economies. And and I think you've been with me in this call. Come on, everybody, share this. And suddenly over the last year, that's exactly what they're doing. Everyone is getting into the market and sharing this growth. And we can talk later about whether markets are horribly overvalued and they're going to crash or not crash, whatever. But the participation has been wonderful to watch, even if it has been driven by stimulus money.
Well, and it's also interesting is that if you look at the trust indices, like the Edelman Trust Index, what is the one part of society that trust has not diminished in, right? It's diminished in every single category but one, and that's the private sector. So, and what do we see in the private sector today? The biggest pools of cash on the planet, right? Microsoft, Apple, Amazon. So this is what, you know, people did during lockdown when they had nothing else to do. And I think a particularly important group of those people are the gamers. And they all took one look and went, well, I could keep playing in unreality, or I could go into reality. This is very interesting. They're giving me free money. And I've never really looked at reality before, called NASDAQ or called the stock exchange. And actually, this is cool. And these people made a ton of money repeatedly throughout this crisis. So they're like flush with cash now. So it's a huge democratization of the access. And I'd go even a little bit further and say that things like Robinhood, which I know we'll come to, it was literally like a digital flash mob. It was a digitization of the mob itself. And so this is what we're witnessing. It's an extraordinary moment in history.
But do you think that these people will stay with us in the market? And when you look at the numbers in the UK and you look at who is doing this, you've got a lot of the gamers, as you say, but also people who are on furlough in the UK, i.e. who are paid by the government to not work. These people are much more likely to be new investors than people who are not on furlough. So a lot of it is to do with spare cash and boredom. And once we get out the other side of this, and people won't have spare cash because they'll be spending it quite rightly on booze, parties, and travel and petrol, right? They won't have spare cash, and hopefully they won't be bored either, what with the booze, parties, and travel. Will this group of people who I have been quite excited about coming into the market and getting engaged with shareholder capitalism, will they simply disappear? Is it a fad, or do you feel like there might be more to it?
Oh, there's way more to it, because it's more than about making money. For that crowd, it's not about the making money. It's about the exercise of power. It's about the fundamental rules of society. And if they're perceived to be unfair, which they are, then this is their way of changing those rules. I mean, what's happened with, you know, the lawsuits that have now been brought against the various hedge funds and brokers that were involved in the Robinhood case, who were seen by the retail investors to have been depriving them of their due returns. You know, this is a full-on confrontation between the retail investor and the financial establishment. And so far, the retail investor is not only winning in principle, on points of principle, it's winning financially, and they are loaded with more cash than I've ever had before. So they're like, I love this game. I win both ways.
Do you think they might end up engaged with the companies themselves? Because right now, the battle you're talking about is internal to the financial industry, right? So it's Robinhood users fighting against what they perceive as well, I mean, we can argue about this. I suspect it's a little bit about the money, not just about the power. But it's about Robinhood users, ordinary people, fighting against the institutions of the financial industry, which they feel in some way inhibit them from making money in the same way, say they're professionals, right? But the ideal end result is not this infighting in finance, it's shareholders being actively engaged with corporations. And that's what I'd like to see.
Yeah, I hear you. And I would argue that this is that, but it may not take the format that you might have expected.
Okay.
I'm not sure these folks are going to show up at the annual meeting and start asking a ton of questions. I don't think that's their MO. But I do think that they will, when they perceive injustice, they will have a go at whatever that is. And it's interesting because there's a whole new crowd of voices there that are not part of the traditional financial markets. Like there's this guy called Andrew Mo Money, and I've been watching him, and you know, he's a young guy, and you know, for someone who comes from the kind of policymaking establishment, when I first watched it, I'm like, what is he even talking about? I couldn't even like follow his line of thought. But as I've gotten into the rhythm of it, I'm like, I can see why nobody's going to go to a big financial institution anymore for financial advice. They're going to watch this guy, and he just rips apart what's going on, but in plain English for young people.
Okay.
It's really interesting.
I will go and watch him.
Mm.
Okay, so what happens if, so we've got a lot of people with a lot of money in the market, a lot of new investors, a lot of them will be, if you look down the stocks that these people are most likely to own, and this has been a brilliant call, but they own the big tech stocks, they own the stocks that represent effectively the Zoom economy. And you and I are talking on Zoom. I'm loving talking to you, but I think I would much rather be talking to you somewhere else, you know, in a cafe, in an office, on a bar stool, whatever, not here. I don't want to be talking to you here. So the point being that these young people, these new entrants, they own an economy that isn't going to be on top over the next couple of years. And so maybe these extremely high valuations, maybe they start to come down, maybe we see a partial crash in the market as value stocks take over, and suddenly they're not making money, they're losing money. What's your view on the stock market in general? This is a roundabout way of me asking valuations in the market in general. Do you think that are we heading for a crash, or is this recovery, this pent-up demand, going to take valuations back to reasonable levels without a crash itself?
So do you remember that book, Dow 10,000?
Yeah.
And it was like huge at the time, because they were like, oh, the Dow will never get to 10,000. Oh my God. And again, the guy was vindicated, but it took like 10 years before the market hit that level. So
Peppa, can I just interrupt you there to say, have you seen the cover of MoneyWeek this week?
No.
FTSE 10,000 says on the front.
So here's the thing, you know, it's not a fixed number. It's relative to how much cash is in the system. So every time governments chuck this wave of capital, the number for what is the normal price of name any exchange you want has to go up, right? It's got to be a different number. So I think that these valuations are not too high, and that they're going to go higher. And especially, let's talk about the context, the circumstances. So let's get it straight. You have to pay the bank to hold your money if you're in the bond market. So, you know, negative interest rates, people can't even get their head around, what does that mean exactly? So you're being penalized for savings, right? And at the same time, asset prices start to rise, which I think they are not just equities, but I do think there are lots of deals in property that are happening, and property prices are rising, which most people are like, no, they're not rising. And where's the demand, and who's going to want property? But I totally disagree. It's reconfiguring, but there is demand there. So hard assets. And if you look at the commodities world, you can see, you go, oh my God, the market is totally anticipating that hard assets will be more valuable in future. So I think the stock market will go up, but with a proviso. These big names like the Facebook, Amazon, Tesla, those, I could see them having a correction. But the innovation and technology is off the chart amazing. And so I think we're in another industrial revolution. And so I think tech will do very well. But what's the definition of tech? I see it much more as the innovative startup end of the spectrum rather than the publicly listed.
It's interesting. I mean, it's not... we're going to come on to this actually right now. It's not just what we think of as conventional assets that are rising in price. I mean, everything is. If you go to any of the local auctions, for example, you can bid online at any auction, and the auction houses up here, you can watch things going for above their estimate over and over and over. Cars, horses, one of the
I've been watching horses.
Well, because, you know, every year you're allowed out of your house to exercise your horse. So what does everyone
okay,
want? A horse. Suddenly you're seeing the prices of things you simply wouldn't, things you would think of as luxury goods, you would not expect to see the price of going up in a recession. But of course, as previously discussed a million times, this is not a normal recession. In fact, when we look back on it, we'll barely be able to call it a recession. It's something completely different. The other thing that is beginning to happen with people's spare cash is that they're beginning to look more and more at digital assets, the kind of thing that I simply don't understand and you so do. So what I would like you to do now, if you don't mind, is explain to us NFTs.
Yes, it's so fascinating. So an NFT, let's see if I can do this in a way that's really comprehensible. Imagine you have a clip of video, like your favorite sports star in an amazing move, and you take a little video of the video, and you mark it using blockchain technology. In other words, you stamp it for time, date, and there's an ownership structure around this piece. And what's happening is when people register these NFTs in the market, suddenly there's a huge demand for some of them. And most recently, there's an artist called Beeple, and his artwork was bought for, I think it was 66 million, the NFT, because it's only available digitally. And everybody's like, how is this possible? Because it's just like an image of an image. So what are you buying? And this is where it becomes very important to understand this is not about the obvious things. What this is about is disintermediating every art dealer and every art dealership, every art gallery, and allowing the artists to sell their art directly to the market. And if that artwork is resold in future, the artist gets 10% every time it's resold. So for people investing in this, they're about empowering the artists as well as making the money. Although I should say, there's this rumor going around that the person that bought the Beeple already owned 20 other Beeples, and it was incredibly healthy for their portfolio for that asset price to rise so much.
Just about pushing up the price of the Beeples they had already. I get that. But okay, here's my question. It's a digital asset. Now, I can look at that Beeple that's sold for 60 million, whatever dollars, anytime I like. I can see it on the internet. I could even print it out, stick it on my wall. I can see it, right? And so when I think about that, I think, what is the point of owning something that everybody else can see in the same way that you can? I mean, I was looking at this earlier and thinking about it in terms of islands for sale in Scotland, right? So you can buy hundreds of islands in Scotland, tons of them. They're all over the place, tiny little islands. There's one for sale at the moment up north. And the estate agent blurb about it says, you know, own your own island, be private, be completely to yourself, nobody else can come, blah, blah, blah. Complete nonsense. Because in Scotland, we're very lucky and we have this wonderful right to roam. Anyone can go anywhere, anytime. You can't have a private island. Anyone else can come on your island. And I look at the NFTs and I think, well, I can look at that art. Anyone can come on my island. No point owning the island. No point owning the art. Unless you get some kind of kick from the actual ownership, or whether you're not really interested in the ownership. It's just the technology is so exciting.
Well, I think the latter 2 points are the key points. But think about, why is it that people who own famous private art collections lend them to museums? It's the same thing, right? I own this artwork, but everybody can see it down at the National Museum. So how much of it is ego? How much of it is fascination with the technology? I think it's both. The fascinating with the technology, I would go further and say this isn't about artwork. This is about the creation of new forms of money. This is about the creation of new forms of storing value that are digital, that are beyond the reach of sovereign authorities. And let's keep in mind, sovereign authorities are doing exactly the same thing in introducing sovereign digital currencies now, most visibly the Chinese DCEP, as they call it. And DCEP, what is it? Okay, yes, it's a currency, but I would argue it's really what it is a surveillance system disguised as money. You know, because the new form of money, it tracks you. It tracks every move you make. It's like an ongoing video of your life as how you use that money. So I think, yeah, the investors in NFTs are innovating in what is money.
And they're also, I suppose, the key things, not the same as the Chinese money we were just talking about, but it knocks out the state-driven middleman, an NFT, in the same way that cryptocurrencies do. So you no longer have, you know, money is traditionally produced by some kind of authority, by a central bank, by a government, by a king, by a queen, etc.
Yes.
And if it's produced by a community, you've taken out that authoritarian middleman, and that does make it a different kind of money. So that's part of the key as well.
It surely is. And that's why I say it's all of this is kind of like a digital flash mob. This is maybe the modern equivalent of, you know, the French at the barricades in the French Revolution. It's just because it is occurring in a digital space, you don't have police officers and fires, but in history, when you've seen this kind of radical transformation of the definition of money, it's usually accompanied by riots and protests of some kind. In a way, these are the same thing. They're just that they're not violent.
And they're accompanied by riots or protests, or they're accompanied by government crackdown. I've been looking
Oh,
at, and you'll find this so interesting. I'm going to send you these links. You're going to love this.
okay.
In the 1600s in the UK, there was an awful lot of private money circulating because the
Yes.
government messed up minting money, basically, and particularly small denominations. So it's very hard to get your hands on farthings, half pennies, and pennies. So institutions, not even institutions, pubs, bars, grocery shops, etc., just minted their own money.
Mm.
And so you had at one point 4,000 different mini currencies circulating inside the walls of London alone, all private currencies that could be used in the shop that issued them or in local shops. You couldn't take them too far because no one recognizes the currency from your pub in Covent Garden in York. So they couldn't go very far, but here they were, currencies just circulating around the economy of London at a very low level. Got away with it for a while. And then Charles II is like, whoa, hang on a tick here. I do money.
Yeah.
I do money.
Yeah.
1672, out comes a proclamation saying, you know, this is not okay, it stops now. And it did. And so when you look at these types of disintermediated money, and you think, well, how long before the governments say, do you know what, actually, we do money, you don't do money, we do money.
Correct. And that's exactly why it's so important to keep an eye on what sovereigns are doing with regard to launching their own digital currencies. And so the US, there's a program with JP Morgan, because that's how we do it in America. We like privatize the function. So they're doing the test run of how that's going to work. The Chinese have it as a state enterprise, and basically they just give it away. Like you wake up one morning and you pick up your phone and you're like, oh my God, I have £1,000 I can just spend for fun. And so you adopt it just by them giving it away, which is super interesting. But that's why I think the whole story around Bitcoin is so interesting. This question of will governments permit these private currencies to remain in circulation, or will they make it from a regulatory point of view so difficult that it kills it off in order to push the public into their digital currency? And I'll finish with one thing. It's really important. Every politician is going to love digital currency. It's like heroin for politicians because you can literally print as much as you want just by hitting a key. Like, okay, I want to double the money supply, keystroke. I want to have the money supply, keystroke. And you can direct it. You can say, I want tax breaks to go to people who voted with me on these issues, and anyone who voted against me should get a higher tax. This is now totally easy to do.
Yeah, these currencies take away our privacy completely, right? There is a reason to fight for cash, and there's a reason to fight for old-fashioned fiat money, because at least with that, you get to hang on to some vestige of your personal privacy.
Well, that's a whole new issue, is this digital twin, you know, which I have and you have, and everyone watching this already has. The way you appear in that digital space, though, you don't even know what you look like. Like there's no credit score yet for the digital world, you know, and all your behavior patterns show up there. It's not just your finances, it's what are you buying at what time of day, and what does that indicate about your stability, your mental stability. And I love this example because it's so terrifying. Of banks begin to watch the behavior patterns of a husband and wife, and they see a divorce is coming before the husband and wife see it coming, and then they start driving down the credit limit of the lower earning partner in anticipation. And now you have like ridiculous unfairness beginning to unfold through the financial markets.
Yeah, I know this is one of the most frightening. Someone sent me a while back a deck, a presentation for a private equity investment in a fintech company, and their line was, Google can guess what you're thinking. We know.
Oh, yeah. And they do.
Access to your accounts. Terrifying. Moving on from the scary stuff, Pippa. Let me ask you about something. You said earlier that the roaring 20s were going to come back. By the way, we didn't have a roaring 20s in the UK. The roaring 20s is very much a US thing, but I'm hoping for a new roaring 20s here. And you said that in 1920, people had survived the war and survived the Spanish flu, etc., drinking a bottle of champagne. And you know what else they were doing? I know you know what else they were doing in actually late 1919, is they were having an awful lot of sex. So 2020 was the biggest year for births in the history of the UK, and still is. So even with the huge number of rise in the women of childbearing age since 1920, there has never been a year in which more babies have been born in the UK. Now, it wasn't sustained. It was just a one-off. This sort of, I mean, what a year to be a midwife, right? Pram salesman,
Oh my
whatever.
God.
Great year for that. So it wasn't sustained in the way it was in the 50s, 60s, etc. But it was a phenomenal year. Now, one of the things that people are worrying about at the moment is the fall off in the fertility rate. In fact, that last year was a terrible year for births across the developed world.
Yeah.
What about this year and next year? Do you see a massive
Now we're gonna
baby boom?
speculating on sex. So much more interesting than
I think you with a woman.
Well, I remember years ago reading the marvelous historian A.J.P. Taylor, and I remember he described Armistice Day as people were copulating in the streets. And you know, that is right. And in a way, we're coming out of a war zone. It's just the war has been with a bug. And as you come out of a war zone, is there going to be copulating in the streets? Maybe not in the streets, but pretty close, you know? Yeah. And people are going to look, I had my jab done the other day. And as I stood in the queue and I went and I thought, what's really interesting, if you live on your own, I'm lucky, I live with my marvelous teenager, but if you live on your own, what's the first point of contact with another human? It's a jab. Like, that's interesting, right? Culturally. And I think there's an element of PTSD that's going to happen. I know someone who's writing, an ex-special forces officer who's written something about how everyone now is going to exhibit weird signs of PTSD because the lack of human contact. So I think, yeah, people are going to want to connect in lots of different ways. And some of them are going to result in a big jump in the fertility rate. And that, by the way, will make everyone more optimistic and the numbers go up, and people will start to stabilize about their expectations for the future as well, and start to make plans. And I don't know about you, but I know lots of people who are like, I don't want to go through this again without a partner. So now I'm in the market for a partner as opposed to in the market for, you know, swiping left or right permanently. Now they're like, I actually need to choose one.
Choose one and keep it for the
And
next
keep
lockdown.
it. Yeah.
I'm hoping there really won't be another lockdown. There doesn't seem any obvious reason for that, but that is another video altogether, I should think. Pippa, thank you so much for joining us. This was so much fun, and your insights, as usual, have been absolutely brilliant. Now, Pippa, we can follow you on Twitter, can't we? Yep. What's your Twitter handle?
Yeah, it's at Dr. Pippa M, because no one can spell Malmgren. So yeah, and I write occasionally on LinkedIn, and I love to chat. So love to hear from all you guys.
And I hope we'll have you in the magazine again soon. And you can hear more from us at moneyweek.com. You can get our daily e-letter, sign up for that Money Morning also at moneyweek.com. You can follow me on Twitter at MerrynSW, and you can follow John Stepek on Twitter at John_Stepek, and lots more on the website. And Pippa, thank you so much. We'll talk to you again soon.
Good to see you. Thank you.